Hi everyone, welcome to FOREX Trading Empire YouTube channel. In this video, I'll be doing a trade review on this week live top-down analysis. Before I start, make sure to like and subscribe to the YouTube channel. So last week on the dollar index, I anticipated price to run the buy side liquidity. From on Monday, I did mention two scenarios for price to use to run the buy side liquidity. The first scenario was to see a retracement to the daily fair value gap before the run on the buy side liquidity. And I explained that if price were to retrace to the daily fair value gap, I will be looking for a buy when price retraces to a discount point of interest, which is the daily fair value gap. If price retraces the daily fair value gap, then I'll be looking for that lower time frame shift in structure to confirm the buys going for the buy side liquidity. And the second scenario was that if price were to open and trade directly to the buy side liquidity, then I'll be looking for intraday setup going for the buy side liquidity. And I told you guys that I'll be focusing on the 1 hour time frame and the 5 minutes lower time frame for price to run the buy side liquidity. So price traded higher on Monday, price traded higher, closed higher than Friday's high. Tuesday, price traded higher, closed higher than Monday's high. Took out the buy side liquidity on Wednesday. Now, price did not retrace down to the daily fair value gap before trading higher to the buy side liquidity. Price opened, took out a buy side liquidity with Monday, Tuesday, and Wednesday price action. Closing inside the range of Tuesday, Thursday price open, closed lower, traded below the daily fair value gap. Friday, price traded lower, traded to this daily fair value gap. The fair value gap we were looking for a retracement to opening week. So the scenario in which price traded higher directly to run the buy side liquidity. And the approach for you to use to get involved in those trades is to focus on the lower time frame trend. And your major time frame for those trends are the 1 hour time frame going for the buy side liquidity. As long as the 1 hour time frame trend is steady, trading higher, going for the buy side liquidity, and the candles are closing above the previous day's high, then there's a high chances of price going for the buy side liquidity, which in CRT is a trend continuation pattern going for the buy side liquidity. On the 1 hour time frame of the dollar index, on Monday, price open retraced to the new week opening gap, respected the new week opening gap, traded higher, retracement, 1 hour fair value gap, respected the 1 hour fair value gap, tested the other block, respected it, close of the day. On Tuesday, price opened with a new day opening gap. With the new day opening gap, after price retraced back to the new week opening gap, used it as a support one more time. After using it as a support, retracing back to this other block, price traded above the new day opening gap, retraced the new day opening gap, created a fair value gap, respected the fair value gap, traded higher. On Wednesday, during the London section, respected the 1 hour fair value gap before running the buy side liquidity. Now, how to use the intraday setup to take advantage of those trades. Whenever the 1 hour is ready to expand from price retracing back to the new week opening gap, which you can see this was around the London section. You had to look for buy, anticipating price to run the previous day high. Price took out the previous day high. The next day, retracing, having that idea of the power of three in mind. The next day, price retraced back to the new week opening gap, respected the new week opening gap, traded higher. This is the accumulation phase. You can see how price manipulated before the main distribution. So having that idea in mind, price traded higher, retracement back to the new day opening gap, a buy order. Take a buy on your lower time frame, the 5 minutes. You can scalp on the 5 minutes or the 1 minute. Mostly use those time frames, those time frame which was mentioned in the 2025 mentorship program. There are specific time frame that was mentioned in those programs for you to use for your entries. Those are the specific times for you to look for your entries. During the New York time, price respected the new day opening gap. Traded higher, retracement, 1 hour fair value gap, another entry drive to anticipate higher prices. Retracement, 1 hour fair value gap. During the London section on Tuesday, on Wednesday, during the London section on Wednesday, where it respected the 1 hour fair value gap, took out this high and took out the buy side liquidity. These are the times for you to use your intraday setup to take advantage of these trades and how you can take advantage of this trade. Most of it is being explained in the YouTube channel. But I'll be personally be making a YouTube channel on how you can take advantage of these trades, which I'll be using this trade as an example. So make sure you like and subscribe and turn on the notification bell to be notified when I'll be dropping the video talking about how you can take advantage of those lower time frame trades. And the currency I'll be using for that example should be the Euro USD because it's inverse correlated to the dollar index. On Wednesday, after the run on the buy side liquidity, I had a bias that if price were to respect the higher time frame daily fair value gap, I will be anticipating a continuation going for this high. But price traded to the daily fair value gap, traded through the daily fair value gap, which I want to use the daily fair value gap as an inversion fair value gap to the next 1 hour draw on liquidity, which is this daily fair value gap. Now, these are times where you can look at what price is currently doing to determine what you'll be doing going further inside the week. Whenever price trades to my bias that week, and there's a chances of me still anticipating the next draw on liquidity inside those weeks, those are the times where I'm looking for that retracement to the next 1 hour draw on liquidity. Price traded through the 1 hour fair value gap, retracement to the other block, respected the other block, traded lower, retracement, other block, respected the other block. And these are entry levels for you to take advantage of. Price traded below the new week opening gap, which means price will use it as an inversion new week opening gap to trade lower. Point of interest above the new week opening gap is this other block. The retracement back to the other block, this should be around the mid-range of the other block before price traded lower. Came close to the mid-range before price traded lower to the daily fair value gap. Now, in currency pairs like Euro USD, you'll be anticipating higher prices during this reversal after the run on the buy side liquidity. On the daily time frame, this is just a counter trend. This is a counter trend movement down to the daily fair value gap or to a discount price before if there were to be any possible higher prices, then we should see price respect the daily fair value gap to trade higher going next week. But the fact that inside this week, price traded below this new week opening gap, traded below the daily fair value gap, gave me the idea of anticipating lower prices for price to trade to the daily fair value gap. On the daily time frame of Euro USD, on the daily time frame of Euro USD, last week I talked about price filling the daily fair value gap as my draw on liquidity. On Monday, price traded lower to the mid range. Tuesday, price traded lower than on Monday's low. Came close in filling the daily fair value gap. Traded lower after price took out the buy side liquidity on the dollar index, seeing the 1 hour shift in structure where price is trading through the daily fair value gap gave me the idea of price not going for a complete fill to fill in the daily fair value gap. Because we all know that it doesn't matter if a currency pair is correlated, there are chances in price where there's going to be a diversion in those currency, where one currency takes out a higher time frame point of interest, while the other currency failed to take out that liquidity or that point of interest. That gives you the idea of a diversion where if the other currency were to reverse They should be in alignment based on their correlation, which we do know that if the dollar index trades higher, then the euro USD should trade lower. And if the dollar index trades lower, then euro USD should trade higher. And that was the idea, reversing my bias, anticipating a trade through this daily fair value gap. On Monday, price traded lower into the daily fair value gap. On Tuesday, Thursday, and Friday, price did a retracement to a premium price, trading through this daily fair value gap and this daily fair value gap. On the 1 hour time frame of Euro USD, on Monday, after the new week opening gap, price traded lower, traded below the new week opening gap, which I've talked about in lots of video that if I'm looking for lower prices and price trades below a new week opening gap, I will be looking for price to retrace to that new week opening gap to use it as a resistance area, which you can see how price retraced, respected the new week opening gap, which was aligned with a 1 hour order block. At the same time, price was still inside a 1 hour fair value gap. So there's a high chances of price not even closing above the new week opening gap or to decline to trade lower. And this is your lower time frame entry model to go into your 5 minutes or lower to look for those entry after a 5 minute shift in structure to anticipate lower prices to run out the daily low. Price respected the order block, traded lower, took out the daily low. On Tuesday, price retraced 1 hour order block, respected the 1 hour order block, retested the new week opening gap for the second time. This is still another confirmation. Stop should be at this high if you were to use this order block for an entry model. Bias is to see a complete run on the daily fair value gap, to see a fill in that daily fair value gap. On Tuesday, price traded lower, retracement, inversion fair value gap, another entry model, traded lower, retracement, respected the fair value gap, traded lower. And on Wednesday, price took out Tuesday's low. After a run on Tuesday's low, shift in structure. If price were to fill in the daily fair value gap, the higher time frame daily fair value gap, then we should see price respect the daily fair value gap to use it as a resistance area to trade lower for a continuation to fill in the daily fair value gap. But the fact that price traded through the daily fair value gap, just like how price traded through the daily fair value gap on the dollar index, gave the idea of price tracing higher to this daily fair value gap for more premium price going to the mid range of the week. After a trade through the daily fair value gap, price traded higher, retracement, order block, respected the order block, traded higher, retracement, fair value gap, traded, retracement back to the new week opening gap. Remember, we are anticipating higher prices and price just trade higher, traded through a new week opening gap. Chances of price retracing to use that new week opening gap as a support area to trade higher, which you can see here is a lower time frame entry model in which I took locked in a 3.5 hour trade where price traded higher on Friday. And this was the last trade I took on Friday on Euro USD. Taking advantage of this setup is to use this as a daily bias perspective. On every day, you already have a bias on where you're looking for price to trade to. Price respecting a 1 hour point of interest is a clear indication of you going to those lower time frames to look for your entry and try to align it to your own personal trading time or personal trading model, which I've talked about, I've teached about lots of model in the YouTube channel. You can go through the 2025 mentorship program to take advantage of those trades. But if you want to take advantage of those trades and you don't want to go through the lecture, then you can get on board on the Signal group, on my own personal Signal group where I post all my trades in which I'll be taking advantage in the market, which recently I will be adding up a daily trades, how to day trade. I'll be adding up day trading setups in the Signal group. Normally, it was all based on the weekly setup so that traders will have time to take advantage of those trades, even if they weren't on their phone when I posted the signal. But for those traders who will be active during those times where I'll be day trading, those trades will be posted in the signal group for you to take advantage of, which fully will be indicated as a day trading signal, so you can know the difference between a weekly setup and a day trading setup. On the daily time frame of GBP USD, on the live top-down analysis, I anticipated price to trade to the daily fair value gap, which I pointed out that I'm looking for a retracement to the daily fair value gap. Price might trade to fill in the daily fair value gap, but my bias is to see a retracement to the daily fair value gap. And the same scenario that price might retrace to use this daily fair value gap as a resistance area to trade lower, or we might see an opening price trading directly to the daily fair value gap. On Monday, price consolidated staying inside Friday's range. Tuesday, price traded away from the new week opening gap, traded to the daily fair value gap. On Wednesday, price took out Tuesday's low, retraced back to Tuesday's range. Thursday, price traded through the daily fair value gap, and on Friday, price retraced to the daily fair value gap before the push trading higher, using it as an inversion fair value gap. So for those that were in the Signal group, notice that I posted a trade on Friday morning talking about price trading higher. I posted a trade on GBP USD showing you guys that I'm anticipating higher prices using this daily fair value gap as an inversion fair value gap for price to trade higher. And I posted a setup, which was the last setup that we closed close to the closing time of this week. On the 1 hour time frame of GBP USD, on Monday, price open. Price was consolidating inside the new week opening gap, so there wasn't much of a move. But after price traded below the new week opening gap, I was looking for lower prices. My stop was at the high where I was anticipating price to respect the new week opening gap to trade lower, which you can see price traded higher, took out the stop, which I was stopped out, but the bias still remained the same where I'm anticipating lower prices. So the next day on Tuesday, price already traded lower below the new week opening gap. At the same time, price traded below this 1 hour fair value gap. If price were to retrace to the daily fair value gap, then we should see price use the 1 hour fair value gap as an inversion fair value gap to trade lower to the daily fair value gap. Price traded lower, retraced to the 1 hour fair value gap as an inversion fair value gap, trade lower to the daily fair value gap. On Tuesday, price kept the downtrend, trade to the mid range. There wasn't much of a move, only if you're using an intraday setup. So here's the trade to the mid range. A price trade to the mid range after seeing a run on a buy side liquidity on the dollar index, which led to the shift in structure. If this were to go against the dollar index or to trade in an inverse correlation to the dollar index, then we should see price trade through the daily fair value gap, which price did trade to the mid range, retraced to the other block, respected the other block. Now, I weren't involved in this trade because I needed more confirmation in the idea that if price were to respect the daily fair value gap, then this trade would have failed because this was close to a high impact news. This trade would have failed in trading higher. So I sacrificed this first entry in the hope that if price were to respect the idea of a retracement back to the range, then we should see price trade above the daily fair value gap to use it as an inversion fair value gap. That led to the second entry from this order block. Price traded higher, created a new swing high, left at this order block, which was the entry on the trade I posted in the signal group on Friday. A retracement to the other block, price respected the other block, traded higher. My overall idea in price using this daily fair value gap as an inversion fair value gap was to see a complete trend to the next daily fair value gap. So on Friday, price closed around 2 hour off my overall target, which was a 3.6 hour trade. So trade to the daily fair value gap. So on the signal group, we closed it at a 2 hour profit. On the daily time frame of USD JPY, last week I was anticipating higher prices. So on the live top-down analysis, I was anticipating higher prices for price to trade to the buy side liquidity. The scenario I gave out was that a retracement to the daily fair value gap, I will be anticipating higher prices for price to trade to the buy side liquidity. And I want to see price respect the daily fair value gap to trade to the buy side liquidity. On Monday, price did not trade in running out this high. Now, based on correlation, the USD JPY is correlated to the dollar in the sense that if the dollar were to trade higher, then USD JPY should trade higher. And if the dollar were to trade lower, USD JPY should trade lower. So on Monday, the dollar traded higher, took out previous day high, which was on Friday. On Tuesday, the dollar did trade higher, which the USD JPY was not in line with that correlation. It was trading against the correlation. That gave me the idea that if price were to support from this daily fair value gap, then price should be in correlation to the dollar index. And seeing the dollar getting weak on Wednesday, showing a 1 hour shift in structure after trading through the daily fair value gap from the dollar index, gave me the idea that we might see a retracement on the USD JPY, a retracement to the other block. So on Tuesday, price retraced the daily fair value gap. On Wednesday, price traded through the daily fair value gap, retracement back to this order block as an internal shift. On Thursday, price respected the order block, traded lower to this order block, which was an overall turning point, saying that price traded through the daily fair value gap. In the 1 hour time frame of USD JPY, on Monday, price did lots of consolidation on Monday, consolidating within the price range of on Friday. Traded higher, took out Friday's high before the retracement to the daily fair value gap on Tuesday. Retracement to the daily fair value gap on Tuesday, price traded through the daily fair value gap. During on Wednesday, during the London section, price already traded to the daily order block, respected the daily order block, did the 1 hour shift in structure below the new week opening gap. Price traded below the new week opening gap, a retracement, 1 hour order block, which was around London section on Thursday, where price was below the new week opening gap, a retracement back to the new week opening gap, which was the opening of the London section respecting the other block. You can see how price did a trade lower, retracement, order block. Now, for those in the Signal group, saw this trade, I posted this trade on Thursday, telling you guys I was anticipating lower prices for price to trade to the other block. A retracement to the other block, respected the other block, traded lower to the daily order block. Now, for those following the YouTube channel, there was a short video I posted about this specific trade setup this week. You can go through the YouTube channel, check at the recent shots. I think you'll find this video trade of me indicating that I'm taking a sell with a proof of me taking a sell, trading lower, because this was well against the initial idea of anticipating higher prices to run the buy side liquidity, which I told you guys the best way for you to improve your probability or to increase your win rate is to add that correlation between the dollar index and Forex and Forex pairs like the USD JPY. When you add that correlation, you understand the price action more better. The reason I want looking for this fair value gap to use it as a support to trade higher was the fact that price traded through the daily fair value gap. Even if price traded higher above the daily fair value gap, I was still looking at the daily order block to respect it to trade lower, to trade to the initial daily order block below the fair value gap. And that was the overall idea. Proof that I took this trade, I posted the short in proof that I took advantage of this setup and I was well aware of price trading lower to trade to the other block. On Friday, after price trade to the other block, shift in structure with the other block, I wasn't involved in this trade because I see no correlation to it to in the dollar index at the moment. Maybe going next week, if the correlation were to stay the same, then I'll be anticipating higher prices to run the highs. One, two, ready, go. So that is it for this video. See you guys in the next video.